In this video, I would like to show you about the forex indicator, Bollinger Bands indicator. This is a very famous indicator that is used by most of the forex traders. You may also know about this indicator, but in this video, I would like to show you, how we can use Bollinger Bands not only for range markets. When the Bollinger Bands squeezes or in a trending market, but how we can really use this Bollinger Bands indicator in forex trading, I will show you in this video. So Bollinger Bands are comprised of three bands which are referred to as upper band, lower band, and middle band. The central band is a simple moving average which is normally set at 20 period, and the upper and lower bands represent the chart points at two standard deviations from the central band. If you see this one, this is the Bollinger Bands, and this is the middle band, and this is the upper band, and this is the lower band. The the middle, the central band is a simple moving average which is set at 20 period, and the upper band and lower band are two standard deviations from the central band. Bollinger bands are used to measure the market's volatility. When there is not much volatility, Bollinger Bands are close together. When the market has a lot of volatility, Bollinger Bands spread apart. This can also be told in a reverse way. When the Bollinger Bands are coming closer together, that means the volatility of the currency pair is decreasing. When the Bollinger Bands are moving away from each other, that means the volatility is increasing. See, in this chart you can see that the Bollinger Bands are coming closer to each other. That means the volatility of the currency pair is decreasing, and you can see the currency pair in a range market. And at this point you can see that the Bollinger Bands are moving away from each other. That means the volatility is increasing, and you can see the currency pair is moving in the upward direction. So how we can use Bollinger Bands? Bollinger Bands squeezing. When the Bollinger Bands squeeze, that means the bands come very close together. That means a breakout is about to occur. If the price starts to break the upper bands, then that means the price will usually go up. If the Bollinger Bands start to break the lower bands, that means the price will usually go down. If you see here, the Bollinger Bands, they are squeezed at this point. That means a price breakout is about to happen, and it happened at this point, and the price broke the lower Bollinger Bands and it continued in the downward direction. So using Bollinger Bands in the range markets, you can use Bollinger Bands with any other indicators like stochastics, CCI, etc. in a range market. You can identify range markets with Bollinger Bands easily. In a range market, the Bollinger Bands are parallel or almost parallel to each other and horizontal. In such conditions, if the stochastic indicator goes into an oversold condition and the price touches or breaks the lower Bollinger Bands, you can buy the currency pair. If the stochastic indicator goes in an overbought condition and the price touches or breaks the upper Bollinger Band, you can sell the currency pair. If you see, the Bollinger Bands are almost parallel to each other and horizontal, and at this point if you see this one, the stochastic oscillator is in the oversold region, and the price broke the lower Bollinger Band at this point, and you can enter a buy trade at this point. And if you check at this point, the stochastic oscillator is in the overbought region, and the price broke the upper Bollinger Band at this point, and you can enter a sell trade at this point. Similarly, you can check these points also. You can enter a long trade at this point, and you can enter a short trade at this point. Using Bollinger Bands in trending markets, when the Bollinger Bands are parallel to each other, but moving in upward or downward direction, that is a trending market. When the trend is upward or downward, you should not enter trading immediately. You have to enter the market at price reversals. When the market is trending, generally the price reverses to the middle band, and the middle band acts as a strong resistance or support. Sometimes the price also reverses until the other band then starts to follow the trend again. You can look at other indicators like stochastics or other techniques like candlestick patterns to enter the trading in the direction of trend at this point. When the price reaches the middle band or the opposite band and an engulfing candlestick pattern is formed in the direction of trend, you can enter the trading. Or if the price reaches the overbought region or oversold regions, you can enter trading in the direction of trend. If you see this one, the Bollinger Bands, the upper band and lower band, they are moving parallel to each other, and the direction is upwards. That means the currency pair is trending upwards. And at this point, if you see, at this point, the Bollinger Bands touched the lower band, and at this point, the price touched the middle band. So these are your entry points for a long trade, because at this point, if you check the middle band, it acts as a strong strong support. Or you can use these indicators also. That means whenever the lines cross each other, you can enter trading at those points also. But at this point you have to enter only long trades. Trendline breakouts. This technique can generally be used in a daily chart. Using this technique, you can get 50 to 100 pips profit. If you see, the trend is downwards at this point, and you can draw a clear trend line at this point, and the trend line is broken with a strong candlestick at this point. So you can say that normally when the trend line is broken, and it will break the upper Bollinger Band also normally. So you can take this opportunity, and you can get almost like 50 to 100 pips. You can also use chart patterns with Bollinger Bands. If you see this one, this is a reverse head and shoulders pattern. See, these two are the shoulders, and this is the head. So this is a reverse head and shoulder pattern, and you can draw a neckline at this point. And the price broke the neckline with a strong candlestick, and moreover it broke the upper band also at this point. So if you enter a long trade at this point, you can almost make like 300 to 400 pips at this point. Bollinger Bands and 1 2 3 pattern. So you can use 1 2 3 pattern with Bollinger Bands to find the beginning of a trend. You can also use candlestick patterns with this. So normally, you see, if you see at this point, like you can draw a clear 1 2 3 pattern. This is the first point, this is the second point, and this is the third point. And moreover, if you see, there is a doji formed at this point. So you can say that, and moreover the price didn't reverse until the lower band. So at the middle band, almost at the middle band itself, it started reversing at the so you can say that this 1 2 3 patterns can be used to find the trend, like whether there will be any trend forming in the upward or downward direction. And at this point, since like a doji is formed, and moreover this is a 1 2 3 pattern, you can say that, like there will be an uptrend that is going to form. So you can use this technique to find out whether there will be any trend that is going to form soon or not. So this way you can use Bollinger Bands in many ways. Let me just recap this one. You can use Bollinger Bands to trade in range markets and also in trending markets. In trending markets, again, you can use other indicators also, like stochastics. And in the trending markets, the lower band or upper bands, they are like sometimes the middle band, they act as strong support or resistance points. and you can use trend lines, and you can also use chart patterns. You can also use 1 to 3 pattern with Bollinger Bands. Thank you.